Hello guys, this is Soji and you're welcome to Soji Forex. If you're coming across this channel for the first time, you're welcome to our channel where we share exciting ideas on how to trade the financial market. If you're looking for how to trade using price action, using strat money, market makers method, and how to trade profitably, then you are in the right place. And I will indulge you to go through all our previous video, as every subsequent video is an add-on to the previous video. In today's video, we want to look at mastering candlestick pattern. Mastering candlestick pattern. Now, the place of candlesticks can never be overemphasized as far as trading is concerned. When you open your chart as a trader, the first thing you see, your first encounter, is encounter with the candlesticks. So there is no way you can be a profitable or a successful trader without understanding what each of these candlesticks represent. So candlestick communicates something, and your ability to understand the language of the candlesticks is your beginning of becoming a profitable trader. So in today's class, we want to look at the various candlestick patterns, what they represent, and how you can leverage, take advantage of this candlesticks pattern in your trading to maximize your chance of profitability in this market. So without wasting much time, let's dive into what we have to share. Now, what is candlesticks? You might have heard several definitions of what candlesticks is all about, but specifically I want to let you know that candlesticks is a fight, a reaction between a buyer and a seller. Candlesticks is a reaction between a buyer and a seller. So it is candlestick that showed you the attitudinal behavior of a buyer and also the behavior of a seller. So what that means is that this candlestick helps us to communicate what exactly is happening in the market. And in every candlestick, there are three reactions. One, it is either the buyers win, or the sellers win, or nobody's win. And that is it. Just as it is in a football match, it is either an opponent win or the draw. So one side must win or the draw. So the same thing is applicable. Candlestick is a fight between buyers and seller. It is either the buyers win or the sellers win, or nobody's win. Okay, and with that, I want to share with you briefly some facts about the candlestick. Now here are a chart showing us the various types of candlesticks pattern. And from the first one, from the heading, we have it, and this is what we have as the heading. We have the bars, the name. Is it bearish, or what do you see about it? So looking at this, we have the spinning top, and this spinning top can either be bullish or bearish, regardless of where it is from. And when you look at this body, you realize that these candlesticks are neutral candlesticks. Okay, and after that, we have our dojis, which are also neutral candlesticks. Then we have our bullish engulfing candle. We have our bearish engulfing candle. Alright, so basically candlesticks are categorized into single candlesticks, okay, double candlesticks and triple candlesticks. So this is how candlesticks are formed. For you to use your candlesticks for an entry confirmation, it is categorized into these three basic categories: a single candle, a double candle, or a triple candle. These candles here, the hammer candlesticks, which is what you are seeing right now, are the single candlesticks. Now look at how this candle is being formed. This is a hammer. Now this hammer, the wick of the body is 2 times higher than the body itself. So if the wick is 2 times or more higher, the more the wick, the stronger the candlestick's signal. And this is one of a reversal candlestick signal for a buy market. Then you are looking forward to a buy in an area of support or another block, whatever the case may be. Then we have our hanging man. The hanging man is a bearish reversal candlesticks. As you can see it being properly highlighted, this hanging man gives us a signal for a sell in an area of resistance. You can see that this candle has been pushing to the upside, and all of a sudden, if at your resistance zone you identify this hanging man, it simply means a reversal is about to happen. And only identifying a single hanging man is not enough for you to make your entry. You wait for a follow-up candlestick, another bearish follow-up, and you can see we have about 1, 2, 3. So when you get the second follow-up, you make your entry at that zone. Then this is an inverted hammer, and as you can see here, this inverted hammer that we are referring to here is when the market is in a downside. The market is trading bearish and you are looking forward to buy. So this an inverted hammer is applicable in a downtrend, either at a level of support or when you have a bullish order block, as the case may be. And then you wait for another confirmation, a follow-up, which is of this one, for you to be able to make your entry at the close of the second follow-up candle. You make your entry, and then your stop loss is 5 pips below that particular candlestick pattern. And then after that, we have the shooting star. And where is the shooting star applicable? This shooting star is applicable in an uptrend, and this shooting star is formed at the resistance level, and it's also at a level or in a bearish order block. So if you find out this resistance is a reversal signal in an uptrend, and what do? You wait for your entry is at the close of the follow-up candle. So once the second follow-up candle close, you make your entry, and then you have your stop loss 15 pips above that level. So this is, and then from there we have our double candlestick pattern, and then you can see like what we are having here is a bullish engulfing candle, okay, whereby the market is making a bearish candle, and it must be at a support zone. This level should be your support. In this support zone, or in your bullish order block zone, you find out this particular candlestick formation engulfing the previous candle, which means it covers the body of the previous candle completely, and then you will make your entry. Remember, there is a rejection. From there afterwards, you make your entry, your stop loss is below, and you are good to go. And after that, we also have a bearish engulfing candle, which is the opposite, and this should be found around a resistance or a bearish order block. Then afterward, we have the tweezer top. Tweezer tops are two candles with double wick. Okay, just as you are seeing it, these are two candles with equal body and equal wick. This is a textbook example. Most of the times you will not get the wicks to be exactly equal, but they are still tweezer tops. Why? Because they will both have rejection from the level of resistance or a bearish order block. So these candles, they can be found anywhere, but they are not useful everywhere. It must be around your point of interest, which is an order block, an imbalance, a resistance, or a support level, as the case may be, or within an indicator zone, depending on what you are using for the analysis. And then afterward, we have a tweezer bottom, and this is the opposite. It's a bullish signal which gives us a buy entry. It's letting us know that buyers are now in the market. And then we have our morning star formation. Morning star formation, which is an example of a three candlestick pattern. What is this morning star formation all about? You can see something like a star in between. So in this star, you will see that this star is more or less like a doji. Yeah, this star that I just highlighted inside here now is more or less like a doji, which shows that there have been a bearish pressure, sellers are in control, and then suddenly they lost control. And in this scenario, nobody wins. So the balance of the force is neutral. And then suddenly you see a bullish pressure engulfing the other candle and pushing price to the upside. This should be in an area of support or a bullish order block for you to make your entry. And then we have an evening star, which is the opposite of that particular candlesticks. Then we have our tweezer white soldier. What does it mean? Market has been going bearish, and then all of a suddenly you find three bullish candles following each other consecutively, showing you the presence of buyers in the market, and it must happen at a zone. Remember, you don't trade candlesticks in isolation. It must be traded in a zone, and all these are applicable, as you can see, in all area of your trade. And I strongly believe that you are gaining value from this market, from this lesson. And if you are doing such, please do not forget to like, do not forget to share this video with your loved ones. Support what we are doing by liking the video. By this, you are not only contributing to the channel, but you are recommending the algorithm of the YouTube so that other users can as well take advantage and learn from this lesson. Now, we said every candlestick is a fight between a buyer and a seller. So you can see most of the time a candle will form in this way. This is a doji. What makes this candlestick a doji is because at a time, this is what we're having. At the time this candlestick was forming, it has no direction, and then suddenly it will push. Suddenly price will begin to push to the upside. Price will push to the upside, and after this reasonable push to the upside, okay, price will push to the upside. Price will push to the upside. Then suddenly you see price begins to return to the downside. It keep pushing, and then it will close at the downside. So what does this candlestick tells us? It shows us that there is a fight of who is in control of the market. So in every candlestick, there are always a buying pressure and a selling pressure, and it will keep struggling and struggling and struggling, and all of a sudden it is either somebody win, which will give us a body, or nobody wins. Don't intend this video to be long, and I believe you are gaining value from this video. Please do not forget to like, to share this video with your loved ones, and see you in a subsequent video. Cheers.